Hello everyone, welcome to Property Experts where we provide you information related to property in a sensible manner. Hence, before purchasing property worth lakhs and crores of rupees, please do watch our videos to never miss any of an opportunity and to never fall in any sort of a scam or a fraud. Well, we can have a strategy for our investment purpose. But if I'm talking about an investment strategy, is there any law behind it? No. It's just a guide of how you can choose your investment strategy. So, what can be the different parameters based on which I choose my strategy? There can be multiple parameters like what it can be like my risk appetite. So, depending on my risk appetite, my investment strategy will change. Right? It can also depend on your goals. So, whatever it's a short term goal, whether it's a medium term goal, depends on that. It also depends on these points what my investment strategy can be. It can also depend on your time horizon, whether it's a long time horizon, short term horizon. So, what are the multiple parameters in short based on which you will choose your investment strategy? One more very important point is that your investment strategy can be different than my investment strategy. One more important point is that before I choose my investment strategy, I have to do a KYC. I just said KYCs and not KYCs by the way. What is KYC? Like know your customer or know your client, but that is done by businesses to understand their client. I personally believe that first it should be know to yourself who are you. If you understand who are you, based on what you are and your investment strategy can be decided, but based on what parameters. So first of all, you have to understand, okay, if my age is whatever, like I'm younger, then I have a better risk taking capacity. My strategy can be comparatively higher risk strategy. If I was 60 years of age, my income earning from that point of time can comparatively reduce, active income can reduce in that case. My risk taking capacity will be comparatively less. The strategy will change accordingly. If you are at a younger age, your investment strategy can be a bit aggressive. That's just one parameter. Second parameter can be a time horizon. If I have to choose for a long term goal, my first horizon is high, for example, my child's marriage. Ideally, he will marry you, I believe, anyways, like say 20-year time horizon from date. In that case, do you feel that I can take a better exposure for equality or equity as compared to debt? Yes, definitely, because equities can be a good long term investment rather than a short term investment. So it depends on the time horizon as well. Any other point? Yes, it numbers depends for me. Like who all are dependent on me right now? My child is dependent on me. But if I had a lot of dependence, something like Gomet Buddha, in that case, my risk taking capacity would have been lower because I have only one dependent on me. Right now, I can take a higher risk. I can choose my investment strategy accordingly. Number four point can be is how my income is fixed or my income is unstable. If income is fixed, like income is if it is fixed for a while, but it's okay if it is fixed. I have a higher staking capacity. But for me, even if I don't have a fixed income, I know that there is some XYZ benchmark and I do have a kind of a higher staking capacity. It depends on your income as well. And the last one is your risk profile. How is your risk profile? For me, I have done my risk profiling and my risk taking capacity above average. So, based on all these parameters, I know who I am. I have done it, and that's how I'll choose my own investment strategy. I've done this exercise. I know myself, and I know I'm a stockaholic myself, and I know that I'm a stockaholic person. If you are also the same, you can check out the collection. Okay, you have to understand that to choose your risk profile based on these three categories. Now we have one step further. We say that there is a connection between the risk and returns. So always remember, higher the risk, higher the potential returns, and for that we typically talk about a risk return trade off. What does this mean? If you are going for a lower risk, your potential return is lower. Simple example can be investment in FDS. But as you climb up that risk return trade off highest point where you have highest possibility return, simple examples, you are investing in small capitals. Possibility of you getting higher returns is mandatory. And with this base understanding, how let's move on to different strategies. Different investment strategies that you as an investor can choose. Well, there are many investment strategies, but today we are going to focus on top 5 investing strategies. The very first one that we are going to discuss today is the value investing strategy. Now, what's this value investing strategy? You invest in stocks which are currently undervalued. In simple words, their current value, we call it as an intrinsic value, is lower than their market price, than their current market price. So instead of understanding this, I'll give you a very simple example. For this is a comment that I had received on my Pro Investor Special Fundamental Analysis. The comment says that man who charged us 399 rupees, but the knowledge that we got was of 39. So 999 the price paid by the investor was, but the value he got was 39.99 rupees. Now you can just imagine that if it happened with the stock, then what he could have been, or as an investor could have paid, would have gotten a value of 39.99. Would not these instances, not this would happen over a period of time. You'll have to buy and wait and have patience. I have understood this. Now, focus is on value investing. Try and find stocks which are currently available at a discount to the current market price. What do you think? That the process is very easy? No, you have to actually do a lot of fundamental analysis. You will have to check the valuations of these stocks. But if you don't know how to do a valuation, so we do have a course on value investing. Do watch it. As for now, I hope you have understood what is value investing strategy. For a company, that can be in terms with this line, which is revenue, can be in terms of its profitability, its bottom line, or if you are taking or talking about this growth of a YouTuber, it can be based on the subscriber count, right? So you can invest based on growth. And how can I decide that whether it's really higher growth? You can compare it with its peers, the competitors, or you can compare it with the industry average, right? So I am talking about a company which is a little bit high market prices as compared to its intrinsic value. With Veda, it is a fantastic growth. So, if you are an investor in this strategy, then what is your focus? Your focus should be on your portfolio, should be on high growth stocks, should be on mutual funds, which are investing in high growth stocks on a minor portion of that or not, and a minor portion of your portfolio. Should not depth, which I hope you have understood. Let's take a very different and nice example to understand. Differences between these two. So, this is a train, but assume that it's an investment opportunity. So like the train is in the platform right now. If you're an investor, you go inside the train, have a comfortable seat and you sit through the entire journey of the train. It's like value investing. You are investing the potential of what stock before it has kicked off. So you want to enter at the right time and you will sit through it. Through the entire journey, you are sitting tight through the seat. You don't go into that train ticket until and unless it has started as journey, until and unless it has proven its growth. So once the train starts a good speed, that's why you will jump inside and then you will ride the balanced journey. The next investment strategy is income strategy. Means what you invest in investment avenues which will give you a steady stream of income. So this steady stream of income can include dividend income, interest income and whatnot. So how do you get this? Possibility number one, investment in stocks which can give you steady dividend, or you can invest in REITs which can also give you a steady dividend. Possibility number two, you invest in bonds or debentures which will give you a steady interest. Who will be interested in such an investment strategy will be generally retires with active source of income has vanished. The next investment strategy is conservative investing. There are some people who say that Rashna, if it's investment in to put 100 rupees in stock market, like I don't want like 200 or 300. At least 100 should be saved. That's more or less like a conservative strategy. These people are generally people who have a low to moderate risk taking. Where do these guys invest? Should they be investing in small caps and mid caps? No, they should be investing in large caps, blue chip companies, so that a typical investing portfolio can look something like this, where a major chunk, almost 70 to 80%, can go in fixed income or the securities like debentures, like bond, and a minor portion, 10 to 20%, can go equities. But again, as I mentioned in the blue chip stocks, the last investing strategy for today is aggressive investing strategy. It's exactly the opposite of the previous one, which was a conservative investing strategy. Who will go ahead with this strategy? Those who are high taking risk or the takers. So when they can invest in small caps, such as mid caps. They can also invest in commodities or collectibles for that matter. So if you have heard about the latest fashion and collectibles, which is, if you don't know what it's, okay, we can discuss in some points later in our later videos. Thank you so much for watching this video. I hope you have learned a lot about many things in this video. Do watch all our videos so that you have no doubts regarding property. Thank you.